In a system where housing is considered an investment or a commodity, the human need for shelter will always take a back seat to the interests of the investor class. Now, recently, for a brief moment, the failure of Zillow as a major investor in single family residential homes yielded pretty satisfying headlines for people like me. But it also highlighted a pretty serious issue of treating housing as a business venture as opposed to something that's necessary as a basic human need. So, what happened with Zillow? The real estate listings website tried its hand in this mass scale home flipping venture. But it turns out that real estate speculation is just a little more complicated than the company had anticipated. So in August, there was an arms race among tech companies that were trying to buy up as much real estate as possible as housing prices exploded across the country. Zillow bet big, telling investors that it planned to buy thousands of houses throughout 2021 and turn its homes division into a billion-dollar business. So collecting personal data every time you go onto its website to look at real estate listings wasn't enough for them. They wanted to find another way to maximize profits. And so they decided to do this like mass scale home flipping, venture. At the time, by the way, home prices were continuing to move upward, and you would expect Zillow to make a handsome return on this investment. But it turns out things didn't go so well, and I love it. So as the summer came to an end, it seemed like Zillow's offers business was also cooling down. In October, the company told investors that it would stop buying houses, citing construction, renovation, and housing labor shortages. Bloomberg, however, speculated it could also be motivated by excess inventory and reported that Zillow seemed to sell a good number of houses at a loss instead of a profit. Now, before I get into more details on what happened with Zillow, just remember there's a limited inventory of homes for working class families, middle class families to buy. And when there's a lack of inventory and there's demand, already that drives the price of homes up to something that becomes incredibly unattainable. However, these Wall Street investors, these institutional investors, buying up thousands of homes, in some cases, hundreds of thousands of these homes, obviously puts ordinary Americans at even more of a disadvantage. So when you've seen the housing prices really explode, understand that one of the factors, leading to this has to do with these Wall Street or institutional investors. Now, Zillow's gamble had already resulted in tremendous losses, forcing the company to scramble for a way to offload its bad investments. During the most recent quarter, Zillow's home segment, which includes Zillow Offers, recorded nearly $422 million in losses before taxes. That's up from roughly $76 million in losses a year earlier. Now, Zillow is looking to offload around 7,000 of the homes it bought. Now, unfortunately, poor decisions by executives usually translates to consequences for everyone else. Here's Zillow's CEO, Rich Barton, who, by the way, is still employed, discussing what those consequences are.
The decision to wind down our Zillow Offers iBuying operation involves a layoff of about 25% of the workforce. And that is a heavy, heavy thing given all of the people involved and all of the work they've put in.
We made really bad decisions. And so as a result, 25% of our workforce will be laid off. But I'm the leader of the company that engaged in this massive fail, and I get to do cable news interviews and I get to keep my job. Awesome. Now, imagine losing money on real estate in an economy where low interest rates set by the Federal Reserve led to an explosion in home values. Not many predicted Zillow's failure, but some were able to read the tea leaves, like Steve Eisman, who raised red flags back in August of 2019. This was before the pandemic era. This was before the pandemic era home buying spree by Wall Street investors. And I think that this was certainly foreshadowing, but people weren't paying attention.
The part of the business I find the most problematic is what they call their I believe, iHome business, internet buying business, where they actually go out and buy homes and flip them. I actually think the company doesn't understand the risk, the real risks of this business, which are massive. There are thousands of mini markets all over the United States. They're all local. They're all extremely different. They all have incredibly different risks. For example, did you know that in Dallas, there's a problem that many homes have cracked foundations? These type of different problems exist all over the country. This is a capital-intensive business. I know only one thing for certain. Between now and 5 years from now, assuming the company has some level of success, there will be massive problems that they will uncover.
Now, while Eisman might have known about the foundation issues in many of the houses in Texas, apparently Zillow didn't do its due diligence and invested in those homes. And let me just say, repairing the foundation of a home costs a lot of money. It's not as easy as just buying a home and doing like minor renovations to just flip it later for a much higher price. And so, understandably, Zillow found itself in quite a pickle. But for those of you who might be celebrating the massive fail by Zillow here, and I know that I did for a very short period of time, just understand that the 7,000 homes that Zillow is looking to offload will not be back on the market for ordinary Americans to be able to make bids on. No. They're looking for institutional investors to offload these homes on. The company is trying to sell the homes to institutional investors, read Wall Street-like firms, to the tune of $2.8 billion. Investors made up about 20%. That's 1/5, guys. 20% of the home buying market in 2020. And Zillow says that it and its competitors made up around 1% of the housing market in Q2 of 2021. A fifth of the housing market, though, is a massive and influential chunk. And I really want to emphasize that. When you have these Wall Street investors buying up like a massive amount of homes, I mean, 1/5 of the homes or home sales were conducted by these Wall Street investors. Again, it artificially ends up driving up the cost of the limited inventory of homes. And look, I'm in the camp of homes should be thought of as shelter, as a basic human need. There shouldn't be a profit motive behind it, right? But you should also understand that owning a home was really the only vehicle left for working families to build wealth. A lot of families actually have relied on the home that they've invested in as their retirement, for instance. That's how broken our system is. And so that one vehicle to build wealth for working Americans has been taken away by these Wall Street investors with the help of the United States government, by the way. Now, rather than protecting communities after the 2008 economic collapse, Obama-era financial policies actually further put American families at a massive disadvantage, okay? And it's important to look at the failures of these policies so we can kind of recognize them as they're being proposed in the future, but also so we can actually diagnose what the real problem is in the way that we carry out financial policies in the past, right? So rather than protecting communities and making it easy for homeowners to restructure bad mortgages or repair their credit after succumbing to predatory loans, the government facilitated the transfer of wealth from people to private equity firms. And that is a huge problem that we're experiencing today. For instance, in 2016, 95% of the distressed mortgages on Fannie Mae and Freddie Mac's books were auctioned off to Wall Street investors without any meaningful stipulations. And private equity firms had acquired more than 200,000 homes in desirable cities and middle-class suburban neighborhoods, creating a tantalizing new asset class, the single-family rental home. Now, think about what the priority was here. The very Wall Street firms that engaged in the bad behavior, that collapsed the economy, were essentially awarded with these homes that were honestly pennies on the dollar. They were able to get those homes for pennies on the dollar. In the meantime, all those American families who were foreclosed on really didn't get much help from the Obama administration. They lost their homes. And remember, they were people who were victims of predatory practices by Wall Street firms, right? These predatory subprime loans. Now, Blackstone benefited from the Wall Street-friendly policies the most. By early 2020, the New York Times reported that strategic acquisitions culminated in the Blackstone subsidiary Invitation Homes, making Invitation Homes the largest single-family rental company in America, with 79,505 homes after Blackstone sold its shares in the end of 2019. Now, Wall Street's latest real estate grab has ballooned to roughly $60 billion, representing hundreds of thousands of properties. By now, a whopping 20% of residential property is being gobbled up by these institutional investors, and they're not looking to flip the houses either. What they're looking to do is corner the market on rentals and essentially become these corporate landlords who can jack up rental prices as much as they want. Now, since inflation continues to dominate headlines, it's worth noting how Invitation Homes CEO Dallas Tanner answers questions about the undeniable and untenable inflation in housing. Let's watch.
And you certainly continue to be an active acquirer of more properties, given the fact that there is such a tight supply of homes out there, and we do see those prices on the rise. Are you able to buy what you're seeking, and what does that look like?
Yeah, we feel really comfortable that we can grow our business by, at least $1 billion this year in terms of new acquisition growth. It is a tight environment, but remember, there's still 6 million transactions every year in the U.S., and about 98% of those go between mom and pops and individual investors that are trading back and forth. So there's still plenty of opportunity to be an acquirer and to continue to grow the business. But the supply side will, stay relatively tight. I mean, mortgage rates are still, near the floor. We're not expecting new deliveries to all of a sudden come flooding into the marketplace. So I would expect that home prices stay relatively stable, if not continue to grow in value for the homeowners in the country.
Yeah, I mean, it might be beneficial for people who already own the private property, who already own homes, for these prices to continue going up. That means that they're earning equity on these homes. But also, why don't we think about what this means for everyone else? And remember, we're not talking about some unnecessary object that people want to invest in. We're talking about something that is a basic human right. So what does this mean for people who don't own homes?
Goldman Sachs out with a new note this week, forecasting home prices surging another 16% in 2022 due to mismatched supply and demand.
It's not just the worry that prices might crash. It's also the fact that this is harming home buyers. It's harming would-be consumers. It's harming workers. It's become so costly to buy a house now that that is detrimental to the economic outlook in and of itself. The thing that alarms me is the advance in prices by 20% in 1 year. It's something we've never really seen before. We might have seen it when we had hyperinflation in the late 1970s, early 1980s, but we haven't seen it for a good 40 years.
And unfortunately, Zillow's speculative actions have not led to more of this intense focus that's necessary on how to rethink housing as a human right, or to ban institutional investors in doing these investments in the very least, right? I mean, that would be the first step, but obviously it wouldn't be nearly enough to ensure that everyone in this country would have a roof over their heads, that everyone in this country would be provided that very basic human right. Still, housing is considered a commodity. Most of the focus has been on whether Zillow's proprietary method of evaluating home values is accurate enough. For instance, in light of the challenges Zillow faced with its home buying efforts, some people took to social media to call into question the accuracy of the Zestimate tool. Real estate analysts like Mike Delpreet argue that the home value estimates on Zillow are just meant to manipulate the market further. He says it's really a toy. It's meant to drive people's interest in property. And by the way, it's no surprise that Zillow used its Zestimate, which has a top secret methodology in determining home values, to make cash offers on homes on the market for its home flipping venture. So prior to its home flipping failures, Zillow's chief operating officer decided to spin the company's home value assessment as this wonderful metric that enhances transparency. Jeremy Waxman said this: presenting the Zestimate as a cash offer to qualify homes up front will save time, reduce friction, and provide greater transparency, getting us closer to our vision of helping customers transact with the click of a button. But considering the company isn't upfront about its methodology, and now that its iBuying venture has failed, those claims are laughable to say the least. And look, some already knew that. An unsuccessful 2017 class action lawsuit against Zillow claimed that the company was misleading home buyers by publishing figures that were below what sellers were seeking for their homes. The judge ultimately dismissed the case, noting that the tool's name itself indicates that Zestimates are merely an estimate of the market value of the property. But look, imagine a world where we didn't even have to think about a Zestimate. Imagine a world where we didn't have to worry about market manipulation under a system that seeks to maximize profit for private corporations. Imagine a world where we could all find or find ourselves in a safe, comfortable place to go home to without having to worry about banks foreclosing on us, without having to worry about a landlord breathing down our neck, without having to worry about rent being jacked up without us even expecting it. So I think when you look at the various, housing market issues, when you look at the problem of affordable housing, it always goes back to the fact that we see housing and homes in this country as a way to build wealth, as an investment, as opposed to a basic human right. Nando.
Wow. Well, a couple of things come to mind. First is, we're yelling all day about politics. And, when you see these kind of figures of the institutional investors just gobbling up every single home in America, you just fall into a pit of despair about how we're just entering this kind of new feudal reality. Yes. In which we just live for and work for these massive financial institutions. The other thing that came to mind, and it's something that's kind of related to my segment a little bit, is that the housing crisis is particularly acute often in liberal cities and liberal states. The housing crisis in LA, we've talked about it a million times. LA is a 100% controlled Democratic liberal city. California is controlled by Democrats. The Congress people are all Democrats. The senators are all Democrats. Everyone is a Democrat up and down the line. Yet the housing crisis here is awful. And it has to do with my segment a little bit because there's been this debate amongst liberals and leftists in recent months about, for lack of a better term, this popularism, or the Sean McElwee school of political science, in which he claims that these suburban affluent people are actually more progressive than working class voters. While that may be true on a sort of survey, the sort of left theory of political change is that that voters ultimately vote in their rational self-interest. And when your politics, like it is dominated by asset homeowners in places like LA, they will vote to protect the asset values of their home, and they will not do anything to change that. So, which makes the housing crisis worse and worse and worse. So yeah.
And let me jump in on that. I think that's such an important point. And we find ourselves in a little bit of a conundrum, right? Because there are working class families who have sacrificed a lot to be able to like scrape up enough money for a down payment of their homes, or for their homes. And it is the only thing that's kind of like keeping them afloat, right? They'll take out equity lines of credit from their home as it increases in value. So I think it's important to give those people a voice as well, because I think that they get forgotten in this conversation as we start looking for solutions. We have to keep them in mind because, you know, if we ever do get to a place, I mean, it sounds like a fantasy, where we start treating housing as a human right as opposed to an investment, you know, you want to make sure that people like who are still like close to the bottom of the socioeconomic ladder aren't like punished further because of what we're seeing from these institutional investors. I don't know what that solution would be exactly. I mean, I think it's important to have that conversation.
No, yeah. I mean, it's the kind of thing where like, if you were to design a society from scratch, owning your home is probably warps the politics of a society, you know, especially when you get into like inheritance and things like that. Like it, you know, it just familial wealth grows and it kind of shuts out people in the rest of the society. And, you know, if you were to design a perfect, you know, kind of society from the ground up, I don't think that you would design it in a way in which people own their homes. Like you would do some sort of public, you know, public arrangement in which, you know, kind of not dissimilar to like what we see in Vienna and places like that, where you get high quality homes, like a high quality place to live that's beautiful and comfortable and, you know, well maintained and things like that, but that you don't, that it's owned publicly, it's owned, you know, collectively, not by, you know, either an institutional investor or an individual or an institutional private interest. That being said, the United States decided to go a different route from a lot of countries and made homeowning the bedrock of the middle class in the middle of the 20th century with the GI Bill and things like that. You know, that has had probably a long-term poisonous effect on our politics. I mean, you did that great segment months ago on Prop 78 or whatever. It was like
Prop 13, which passed in 1978. Yeah.
Prop 13. That is a direct outcome of building a society about 30 years before, or 20 years before, in California, which was this, you know, the California dreaming, baby, you know, like everyone moving out west, there's like cheap land, there's cheap homes, and this beautiful sunny enclave. And then 20 years later, you get this like unbelievably reactionary prop in California that has warped its politics since then, you know. And so that's true as well. You know, it's like people were like own their homes and like what they want to do is like not pay taxes on them and protect the values on them. You know, like once you have it, you become, you know, you can become very tied to it, like as you said, because it is their source of well-being, their wealth, it's everything, you know. So you protect it like with your life almost. And you know, and I'm seeing it here in Venice with this Mike Bonin recall campaign all the time. I mean, it's just homeowners freaking out about the fact that Venice is one of the few neighborhoods in America that is down in terms of home prices. So yeah, it definitely warps your politics, and there's you know, it's like everybody, but like as a class, that's definitely an effect, and you know, how you deal with it is just very difficult given our system. If you enjoyed this video from Jacobin Weekends, please hit like and subscribe. That way, you'll enjoy all of our backlog, as well as all of our future content, including interviews, live streams, and clips. Thank you.